worsens. Now, with regards to the German stock index, what we can see there is after last week's rally, we had a sharp sell-off from Friday onwards, especially from Thursday onwards, especially on Friday. As you can see here, we basically gave back the previous 3 days of gains within 2 days, very sharply falling down here to a low at 15,108. And this morning, even though we opened slightly higher, we actually retested that low, but held very close to that, and are trading in low volatility now, as the economic calendar today is pretty empty ahead of major US earnings for the third quarter coming out tomorrow. We've got Johnson & Johnson, Bank of America, and also the likes of Goldman Sachs. And then during the week, we've got Tesla and other big American mega caps, which will be reporting their third quarter earnings. And that obviously could also have an impact on stock indices going forward. Now, with regards to the banks which did report on Friday already, we had JP Morgan and some other ones as well. And there, the loan provisions were actually lower than what had been anticipated, which didn't really help prop up equity markets in the US last Friday, though, as the Middle Eastern tension had much more of an impact on financial markets. And you can see here, basically, if we were to fall through today's intraday low on the DAX in Germany, we could then perhaps head back down again towards the 6th of October low, which was made at 15,034, and perhaps retest the psychological 15,000 mark, and also the October low, 14,944. Now, as I've been saying previously, provided that that continues to hold on a daily chart closing basis, we could have a bottom still form over the next few days and weeks. But for this to be confirmed, we really need to take out this resistance area made up of the July to September lows, and also last week's high between 15,455 and 15,575. Once we close above there on a daily chart closing basis, a reversal to the upside is most likely to be seen. But until then, the odds still favor, short-term at least, the downside. And if you look at the Nasdaq 100, what we can see here is that it also came off over the last 2 days, but the decline has been far less significant than it was for the DAX 40, for example, in comparison to its previous uptrend that we've seen since the beginning of the month. And here, basically, provided we stay above the 14,430 September low, the upside is still very much intact. And what is interesting from a technical perspective is that on Thursday, I should say, we actually were capped by this July to October downtrend line, which then led to us sliding below the orange line here, the 55-day simple moving average, 15,102. That is the resistance for today, ahead of Thursday's high at 15,339. And this high would need to be taken out for us to then head up to the September highs between 15,520 and 628. But short term, also in the US, we are seeing some downward pressure as the Middle Eastern tensions continue to heighten. The US dollar, which last week consolidated, regained some strength on Thursday and mainly on Friday on heightened tension in the Middle East. And you can see the impact on that on euro dollar, for example, where the euro basically slid against the greenback and fell close to our key support area, which goes back to 104.84 and 44. And this was made up of the December 7th to January lows, and held at the beginning of this month as major support here, from where we bounced back to last week's high at 106.39. But as you can see here, that high in turn was made at the upper downtrend channel resistance line. And since then, we've actually come back down again towards this key support area, currently holding above the 105 area and trying to bounce off it. But from a technical perspective, the trend, and as long as we remain below last week's high, 106.39, downward pressure is still retaining the upper hand for the time being. And the question really is, will this 104.84 to 104.44 support area hold in the days to come? As long as it does, we could still form a reversal pattern to the upside. But as I say, for that to happen, we need to see a daily close above 106.39, or will this major support area give way? And if that were to happen, we could then slide back to the August high from last year at 103.68 and also the low from May of 2020, 103.50. So these are potential downside targets if the euro were to slide further against the US dollar. And the US dollar, basically, if that were to continue to rise on this flight to safety flows into the greenback with regards to the tensions that are being seen and the crisis in the Middle East. And if you look at the euro versus the British pound, here the story is slightly different in that the euro against the British pound has been rising for the last 3 days. Last week it made a 2.5-week low at 86.17, just above that August to October uptrend line. And now it's heading back up again towards this key resistance area made up of the late June high and the mid-August highs between 86.58 and 69. Once that resistance area, if it were to be if it were to be broken, then we could head back up again towards the highs seen back in July and also September, as well as where the 200-day simple moving average comes in between 87 and 87.06. So that is a possible scenario in the days ahead once we take out, or if we take out, this 86.58 to 69 resistance area. And it will remain a probable scenario as long as we stay below last week's low, above last week's low, I should say, at 86.17. Now, the British pound against the US dollar is looking similar to the euro against the US dollar. So the safe haven flows into the greenback have led to the currency pair sliding, but we fell to 121.23 on Friday, and so far we're holding above there today. Now, the key level to watch out for is the 120.38 low. That's the low on this daily financial bed seen from the beginning of this month. And basically, if that were to give way, then we basically have the 120 area, the psychological 120 area as a possible downside target. And then below there are the January and March 2023 lows at 118.41 to 04, which could be potential downside targets. So here again, for a bullish reversal to actually be confirmed, we need to rise now above the last reaction high. That is to say, a high which is on the daily candle higher than the one to its left and to its right, and that was made on Wednesday at 123.37. Now, we had a high above the previous resistance here, the relative high going back to the end of September last week, and that to me did confirm that we are actually in the process of reversing. But now that the currency pair has come off very sharply again, what we need to see for this scenario to remain valid is to stay above the 120.38, the early October low, and then to confirm again to rise above last week's high. The anticipated, I should say, ground invasion by Israeli troops into northern Gaza, which hasn't taken place yet, and it's trying to be averted by several major players. But the threat of it has basically led to an upsurge in the price of gold. And we can see that last week, the gold price rallied very sharply from around $1,869 per troy ounce to $1,933 per troy ounce, as we can see here. And that rise took us above the 200-day simple moving average here in red at $1,930. And it also took us above the May to October downtrend line. But today we opened lower and are trading around the $1,915 mark. And the reason for this is that the anticipated ground invasion of the northern Gaza Strip has not happened over the weekend as investors were thinking it might. And therefore, there is a little bit of profit taking place here with regards to the gold price. From a technical perspective, what needs to happen is for us to take out Friday's high, $1,933, and then ideally also the September highs between $1,947 and $53, because that then could take us to the next higher resistance area made up of the June and July highs between $1,983 and $87. But so far, short term, provided we stay below the high seen last week at $1,933, we may actually see further back down into this June to mid-September support line, which now, because of inverse polarity, has become a resistance, a previous support line, which is now is still a support line going forward, even though it's been broken through last week. And that comes in between the $1,901 and $1,885. So basically, if we were to slide in there, provided we stay above $1,885, the recent upside thrust would be the dominant factor within the chart and point towards further upside being seen with the gold price. But if we were to fall through $1,885, it would probably indicate that the gold price is once again falling. But very much all of that will depend on what happens with regards to the Middle East, whether we see escalation happening there or not. And if you look at the oil price, that also shot up on the anticipated ground invasion of northern Gaza by the Israeli Defense Force. As you can see here, the price of WTI oil rose from around $82.40 to $86.74 on Friday, and we're trading very close to there today. Now, if that high were to be taken out, the next higher target area would be the late September low at $87.84, and then above that, the psychological $90 mark, which is a possibility given the tensions that we're seeing in the Middle East at the moment. If we were to see an ABC correction, which is a possibility, which is just a correction in this previous downtrend, then that should peter out pretty soon, and we would have to see a fall through the June to October uptrend line, currently around $81.95, and also the last reaction low, that's to say last Thursday's low at $81.52, for a continuation of that downtrend to then take us down to the August lows and the 200-day simple moving average at $77.60 and $77.67. But right now, it looks more likely that we will see further upside with regards to the oil price, at least short term. And last but not least, I'd like to mention natural gas prices, which have risen very sharply over the last few days on colder weather forecasts and increased, or therefore future increased demand, pushing the price of natural gas higher. This situation is much starker in the European gas markets, which rallied much stronger than the US markets did. But what we can see here is basically a top formation building, and the price of natural gas, perhaps in the US, slipping back down again towards its August high at $3.05, as long as we stay below last week's high at $3.58.5. Thank you very much for watching Charting the Markets with me, Axel Rudolph. Please feel free to follow me on X. My handle is @AxelR_IG.